Hello traders, and welcome to this video analysis looking at the US dollar and more importantly the US dollar index. So traders, as I have explained on multiple occasions and I have posted videos on this, the US dollar index measures the dollar's performance against a basket of 6 currencies that are made up by the British pound, the euro, the Japanese yen, the Canadian dollar, the Swiss franc and the Swedish krona. Now of course we understand traders that this index really dictates how the dollar performs across the markets, and it's really used as a barometer to how the US dollar will perform versus the rest of the world. So traders, as I have explained, in 2018 last year we had a very strong US dollar across the markets, and if you look at the US dollar against all major pairs around the world, the dollar really appreciated in value by around 10%, and the index was up around 10% as well in 2018. Now we understand why. We understand this was being driven by the US central bank raising interest rates last year 4 times, and of course we understand that interest rates drive the value of a currency because it makes a currency more attractive. Because investors, when you buy the US dollar, you will receive at this moment in time a 2.5% credit into your account for the deposit rate that the US central bank pays when you buy the US dollar currency. So if you buy the dollar and you hold your trade for a year, you're going to receive a 2.5% interest rate credit into your account. Plus, if the dollar is appreciating by 10% in the markets, you're also going to profit from a 10% appreciation in the dollar. So if you was to buy the dollar last year and you held it for a year, you would have made a 12.5% return on your money because of the interest rate going up in the United States. Now, of course, we understand traders that this is very attractive to big institutions such as hedge funds who will put big positions into the US dollar. Now, imagine if you're making 12.5% on, I don't know, say a 100 million fund or a billion fund even. So, of course, we understand the returns are massive when you're dealing with big money. So you understand why big money starts to flow into the US dollar last year and why the dollar really appreciated. So at this moment of time, since 2019 traders, the dollar hasn't really appreciated much. If you look at where it was at the beginning of the year to where it is now, it's pretty much flat. And this is because, of course, the Federal Reserve has signaled that they're not going to be raising interest rates in 2019 at this moment of in time until inflation data and leading in economic indicators can suggest that inflation may potentially overshoot their 2% target. And that's when they're going to potentially look to raise interest rates further this year. So because the markets are not expecting any further rate hikes at this moment, the dollar's flat, which means that the long-term trend that we have seen in the dollar for the last couple of years, the last year especially, but we did see a stronger dollar in 2017 also, the dollar's long-term trend should now be capped and kept kind of muted compared to how aggressive we saw the uptrend last year. Now we must remember, if the markets do expect the Fed to continue to raise rates, then we can expect a stronger US dollar as markets will start to price this into the value of the dollar. But until that happens, traders, we can just expect the dollar index and the dollar, more importantly, to continue to trade around current levels in the markets. And this is what we're really seeing at the moment. If you look at the dollar across the markets for where it's trading since the beginning of 2019, we're really not even seeing that much gains. We're flat against the New Zealand dollar. If you look against that's Australian dollar, my apologies. If you're looking against the New Zealand dollar, pretty much flat, not really seeing any gains from the beginning of the year. And you can really see this across the market. Euro USD, again, is flat from the beginning of the year. So we're not really seeing any movement in the dollar. So traders, at this moment of time, the dollar's long-term bullish trend is kept on hold because markets are not anticipating further rate hikes. So what we need to do, of course, is if you're looking to take positions in the dollar, we must also be looking at how other currencies are performing, because that's the only reason the dollar will appreciate in value if other currencies are weakening in the markets. Or, for example, if other central banks are forecast to cut interest rates, like Australia has been signaling could happen recently from their central bank speakers. So traders, I hope that makes sense. I hope that gives you a really good overview of the US dollar. And that you can look to, if you're taking positions in the dollar, just understand the fundamentals driving the currency at the moment. And then obviously you can combine that with your technicals and look to get into some positions yourself. If not, follow my own trades. Thank you, traders.